Good morning, everyone. Welcome to WorkCover Queensland's Premium Masterclass webinar, where we will provide you with an overview about premium and help you understand the ins and outs of your accident insurance policy. My name is Matt Bannan. I'm the Head of Stakeholder Engagement at WorkCover Queensland, and I'll be hosting today's session. Before we get started, I'd like to acknowledge and pay respect to Queensland's elders, past, present, and emerging. We thank the traditional custodians of country throughout Australia for their ongoing custodianship of land, waters, and community. If you need to leave a bit early today, this session is being recorded and we'll send a link to the recording out via email next week. It'll also be uploaded to WorkCover Queensland's YouTube channel. Please feel free to submit any questions during the webinar using the panel on the right-hand side of your screen. If time permits, we'll go through questions at the end of the session, so you can please enter them in and we'll try and get to them as best as we can. I'd like to welcome my co-presenter for today's session, WorkCover's Head of Premium Investments, Robbie McLean. Robbie and his team work closely with everyone at WorkCover and provide oversight, development and guidance for all premium-related functions, including our long-term management strategy. He proactively manages and governs WorkCover's investment framework as well. It's great to have you here, Robbie, and I'm sure everyone's looking forward to this session. I know it's going to be quite engaging and informative. We've got some quick stats. We know we've got lots of employers from around the states and interstate, so we appreciate you've made the time to join us today. As you see on the screen, we've got quite a bit to try and cover today. Just like to remind you listeners that any advice given or questions answered today by WorkCover is general information only. All our policy holders have their own unique setup and claims mix. So if you're ever unsure about what the next steps are, we highly encourage you to reach out to us and we can talk to you a bit further. So let's get into a little bit of an introduction to premium. So Rob, I thought we might first of all just talk about what is the main offering that WorkCover has, and that's our accident insurance policy. Do you want to talk us through a little bit more about that?
Yeah, well, firstly, thank you for having me, Matt. Matt does a lot of these presentations over the years, and it's great to be invited along to do premium. We get to do a lot of presentations to lots of different stakeholders. Normally it's accountants, lawyers, or other industry groups, and I'm completely excited, however, to do a more wide-ranging one today with everybody. And as you said, there is a lot to get through, but we've intentionally tried to cover as much today as we can in the hour. We're hopeful that if this is successful and well received, we can then delve into other aspects of premium into the future, and that would be really exciting for me to be part of that.
Sounds like a good plan. So accident insurance policy, or I think we call AIP out here, so we don't usually use acronyms, but anyway, talk us through the accident insurance policy.
Yeah, well, it's relatively straightforward. In Queensland, if you employ workers, you are required to have a workers' compensation insurance policy, and we'll run through definition of workers, wages, and everything today. It insures you for the statutory costs of any claim that's associated with the person being injured while working for you, as well as the common law costs. There's no limits or caps towards the total amount that we might pay under that. Your policy is renewed every year, and it's a relatively straightforward and predominantly online process for everyone these days. There was one thing that comes up semi-regularly. We often have employers trying to pay their own claims costs. Certainly under the regulations that we have, that is not something that is able to happen. Notionally, we appreciate employers thinking that might be the right thing to do in circumstances, but 100% any claim is to be managed, run, organised through us, and that's really important to overseeing the whole claims foundation, the claims framework that we have in Queensland. These policies protect you against any kind of injury that any worker that you would have at any time while you're employing.
So under that accident insurance policy, who do we cover?
Matt, it's a good question. It's the one we get all the time, and I think sometimes people overcomplicate it a little bit. The simple fact of the matter is, for over 99% of workers, it'll be the case that your person is employed by a PAYG. So that means through the ATO, with tax being taken out, single touch payroll, with a group certificate in the old terms that used to be issued every year. And that's straightforward and that's easy. If you have a person employed like that, you need a workers' compensation policy in Queensland. In addition, and this is one that's a little bit on the edges, people often forget that if you are paid partly or entirely by commission as well, you 100% need a work cover policy as well. That's a specific inclusion in the Act, and that's something that can be missed in situations. You know, the easiest example with that is real estate agents. The second dot point on this list is the one that can be a bit tricky, and I think this is the one that I, as a manager of not only premium but the compliance area, have to deal with fairly regularly. There is a lot of assumptions out there that if you're interacting with someone with an ABN, they're not a worker, and I would 100% say that that is something that every individual policyholder employer in Queensland needs to look at really closely. There are some rules that say if it's a company, a trust or a partnership, that they will never be considered a worker, and that's pretty clear. But if you're employing a solitary person via an ABN and you're paying them by the hour, you know, we would strongly urge you to make sure and review whether that person is a worker, because in most cases we are highly likely, if that person was to lodge a claim, to accept that claim and decide them to be a worker. It's the most common thing we see. Just because someone has an ABN doesn't mean you don't go through the normal test to work out whether they should be a worker for the purposes of WorkCover Queensland.
So if we're talking about that more detailed definition around worker and how an employer or customer of ours might work through that, what are some of the tips and tricks and things they need to look for?
Yeah, thanks, mate. It's, again, a pretty good question. I think the main thing is generally only an individual can be a worker. Now that means any corporation, partnership or trust will be immediately excluded. And that, you know, makes sense given the nature of the entity that they are. I think it's important to look at the type of arrangement that you have with a person, a contract of service, and you start to look at some of the tests, whether they can delegate work, do they bring their own tools, and vice versa. For that, we would point you to the ATO worker determination test, which is linked here in the slides. The definition of work for WorkCover Queensland is aligned with that of the ATO, and we allow you to go and complete the worker determination test through the ATO website as a way to review whether someone you've engaged is someone who should be covered under a policy. There is also a question we get a lot about directors, partners or trustees, and certainly in Queensland, as you can imagine by the exceptions above, directors, partners or trustees are not considered workers and never will be. Even a working director, if they are listed as a director for the company in question, they will never be considered a worker for the Workers' Compensation Act.
On that point, are there other products we offer for people who are not considered workers under the Act?
Yeah, and Matt, I hope that we'll be able to come back in a few weeks possibly with another presentation on some of the other products we have. In that situation, there's a product called a WIPI, or a Workplace Personal Injury Insurance, which is a personal insurance that you can also purchase from WorkCover. That'll cover anyone who's otherwise excluded because they're a partner, director or trustee. They are individually priced depending on a variety of factors, including how much that individual person earns or wants to be covered for. But again, that's a policy that can be set up in honestly 10 minutes via the website. It is a bit different to traditional insurance policies, and it can be done really fast. And we encourage people to give us a call if they have any questions about that.
Now, I'm an employer who's taken out a policy with us. So how do I know that I'm actually covered? What sort of evidence do we provide to support that?
Yeah, so we offer all policyholders a certificate of currency to prove they have the appropriate insurance. And I actually love when we get requests about this, because it means people are taking their insurance seriously. A certificate of currency is issued anytime you renew. It gives you the coverage for the remainder of the year. And there is also a slightly different approach here, where we appreciate until you renew, there are people and businesses in Queensland who are required to show their other parties that they are insured. So about this time of the year through to the 1st of July, you'll all receive an interim certificate of insurance. That'll cover you until you renew, if you renew by the due date. That is something you're able to give to third parties who are requesting information at that point in time. The moment you renew and either enter into a payment arrangement or pay, you'll receive an updated one via that email. Now, say you lose the email or you can't find it anymore, you can either ring us and request it, or you can do it online through WorkCover Connect. It's a self-service mechanism and allows you to get that information quick and easy. And there's no limit on how many times you can do it if you keep forgetting where you've put it. We will talk about WorkCover Connect later. It's a very good, online tool for you to manage all your WorkCover needs from a policy perspective.
As you can imagine, across Queensland, there's lots of different industries and different types of businesses. So how do we assess and price businesses and risk around that across the wide range that is Queensland businesses?
So probably one of our pieces of work we spend most time on is how we risk rate businesses in Queensland. And the way we do that is through the use of a WIC, or as a WorkCover industry classification. And what this does, this basically makes an assessment of the nature of the business that you're in, or the enterprise, and assigns you the correct, industry classification. That classification is then linked to the risk that we've determined with that industry. And it's the predominant industry, and in most cases, every business will only get one. And we appreciate different businesses are structured differently and could have more admin and vice versa. But regardless, every business will get one. And in the long term, if you are less risky than a particular business in that industry, your rate will go down. If you're more risky, your rate will go up. What happens, Matt, is we often get lots of questions as well about, how did you come up with the WICs, or this makes no sense. What is this industry? I've never seen this before. And what we've done here, and we've done this forever, is we actually take the industry classification from the ABS and the ANZIC code so that it's consistent with the way the ABS does their work. And this is consistent with the way all the other work covers, or predominantly all the other work covers, do it across Australia. So it's not a series of industries or business titles that we've made up. We use, the Australian Bureau of Statistics defined industries that allow us to appropriately classify people into where they should be. There is an odd occasion where we might have an industry or a particular business that is unique. And in the developing world of new businesses, there are often very unique businesses that come up every day. And I have some interesting conversations with people. We would recommend, if you think your business is unique or special, just to get in contact with us, and we will work with you and the guidance that the ABS sets to work out what sort of industry that you'll work in. Now, well, I did say earlier that every business just gets one WIC. There are certain circumstances where you would be eligible for more than one WIC. And the basic way to describe that is when you're running two significantly different and operating separate business activities. And the best way I can think to explain that is to me running a company to have a plumbing business at Salisbury and also be running a donut shop at Carindale. And if I'm running those two businesses, you are able to apply for 2 WICs with WorkCover. You'll get a retail sales one for the donut and a plumbing services one for the plumbing supply. If you're running a large business that has several segments to it and different parts to it, but it's all one business with one overall purpose, you are only entitled to one WIC, which will be the predominant business activity that you participate in.
There's a comment up there about labour hire and group training businesses. They're quite a complex area. So how does that work?
Yeah, and they, again, are something that takes up a lot of my time, and I will talk about them later from a compliance perspective. But labour hire and group training, and I thank Matt for raising it, is they have, again, an additional special way of weighting and rating the risk. In the case of a labour hire, we appreciate they may have or may be sourcing labour to a variety of different businesses from a variety of different industries. In that case, they get a special allocation of WICs where they allocate wages to each of those particular industries at a point in time. And the same with group training. Group training gets 4 different options as to where to code their particular, WIC to or their risk to. Again, I would suggest if you are starting out a labour hire or a group training business, it would be really important to get in contact with us and have a discussion, and someone will run you through all of that. We see some of them set up online, and it's not till we get in contact with them in the future that they really understand what's going on. And sometimes that can be too late for them to probably fully understand the impacts of the insurance on their business.
So now we've talked a little bit about what the product is and how we set up the right policy for you. I thought we'd take a bit of time just to talk through how we calculate premium and how it works for individual businesses. So at the moment, we have 2 types of models. We have a simplified and experience-based rating, and they're very different and in different animals in that regard. So, Robbie, do you want to talk us through how the 2 different premium models work?
Yeah, for a long time, WorkCover had one model the way we do premium. And a few years ago, we took an approach where for small business under 1.5 million, we were going to simplify the way we do our premium. And that has made the process for declaration, renewal, as well as explanation of the rating process for them much more simplified for a small business. We appreciate small businesses are busy people, and we have, amended the way we do our premium accordingly. On the other hand, for a larger business over 1.5, they go through an EBR model, and we will run through these each individually in a bit of detail in a second. That looks more at the individual experience of the business significantly, as well as their relativeness to the industry that they're in. There is also a more complex model is used there, but again, completely transparent. All these models and the way we do our business is fully disclosed in our Gazette every year. It explains all the intricacies, and we have a model of being completely transparent with the way we price. And that's, that is a little different to commercial insurance and a little different to some of the other states. There's no hidden parts in the way we do our premium models. Everything is completely transparent, and we're happy for anyone to have a look at it and ask us questions. In terms of the simplified model, which is on the next slide, when we simplified it, we made a change so that we moved it to more a pure ratings-based system. So rather than any complex back-end calculations, it's more akin to how you would see your traditional insurance, where you're a rating 1, rating 2, rating 3 insurer. Effectively, what happens when you take out a policy, you start on the middle rating. If you have a claim in any given year at any time, you move down a rating. If you don't have a claim in a given year, you move up a rating. So a good employer with no claims will sit on a rating 1, which is 80% of the industry rate for the particular industry you're in. So that's a saving there with the intention of rewarding the employer for the good result and the safety that they have at their particular area. In the same way, we appreciate small business doesn't want volatility in their premiums. They want transparency and simplicity. So that, we have simplified the impact of you if something goes wrong and you have a claim.
And I know it mentions up there, we talk about the minimum cost of premium is $200. So that's it seems like a pretty good option for business holders to protect themselves.
Yeah, I think sometimes there's a stigma out there that insurance is expensive. For some of the lower risk industries, that's quite a substantial amount of wages before you get to the $200 minimum premium that you'd have to have it. And I get a lot of questions about, do I have to have it? Is this person a worker or not? If you are running a business and you wanted to avoid all risk, there's a very simple way to do it, Matt. It's to get yourself a policy. And if we can come in with a policy that is sort of in that range of $200, that is pretty decent, cost for peace of mind. An example would be you're running a whole lot of people on direct ABNs individually. There is risk there for you in that respect in terms of us and WorkCover. I would always recommend just getting a policy just in case. In terms of the experience-based model, it is a bit more complex, and we have a detailed explanation here because it does get a bit. Now, the reason it's complex is because larger businesses probably are probably entitled to have more of their own individual experience included in the way it works. And effectively, that's the way the model works. The larger you are, the more of your individual experience is taken into the policy. The smaller you are within the EBR frame, the more the industry rate will impact you. The way it works then is it compares your experience and your size to the industry, and then it gives you an industry rate or a rate relevant to the industry that you're in. It is really important for these policyholders, therefore, to understand the mechanisms they have in place to get people back to work, improve claims experience, and help their injured workers have a better outcome.
It's probably a good point, Rob, because I know that we've had lots of questions leading into the webinar on what sort of goes into impacting your premium. So we had a number of questions around aspects of common law, wages costs that goes into that. So we thought we might just take the time just to stop in and just work through some of these things, because ultimately with a premium, the best way you control your premium is to reduce the cost of claims that go into that. As I say, it is a user pay type system. So the more you spend on potentially, the longer it impacts you. So just to cover a little bit of those aspects. So when we talk about statutory claims costs, That incorporates the weekly compensation payments we might be making to an injured worker, medical and rehabilitation costs, and any lump sum costs that may go to that. When it comes to common law costs, we're actually covering the costs of the settlement of damages and outlays in relation to that, noting there are some particular protection mechanisms built into that. When we're talking to customers regularly about how they can best control their premium and where we're having discussions around a bit of a premium health check to understand how they're going, it's always about opportunities to support injured workers to be back to work sooner, making sure reducing that large cost, which is the weekly compensation, is the biggest cost impacting premium. And having people back at work sooner means they can recover faster, means they're more likely to have a successful return to work and less likely to actually bring a common law claim, which can be quite expensive. So do you want to talk about some of the capping things we have in place in relation to the policy as well?
Yeah, no, I think I might get you along to talk to some of our third parties when I go do these presentations, Matt, because what you just said is exactly the advice that I would give anyone in this circumstance. And you know, the technical specs are there in front of you. You know, included in the calculation is the statutory claims cost for the prior 3 years, and the common law claims cost for 1 year before those 3. Now that seems a bit unusual. That's because it takes a long time for common law claims to be settled and for the costs to come out. And I have a lot of people who are really interested in the dynamics of that, how it works, what's in, what's out. The reality is the best advice I could give anyone in that space is to run a safe workplace. And if you do have an accident, and we appreciate they do happen, having a really strong return to work program in your own workplace to get your people back to work as soon as possible will in the long run save you significant money in terms of this, regardless of what the formula is or regardless of how we calculate it. That will always be better for you as a business owner. There are quite a few caps in there. There's some caps about the total cost. So if you have $1 million claim, well, there will be some adjustment for that in your capping. The idea there is we don't want too much volatility in the premium. In the long term, your policy will go up over time, but you won't be hit with a massive increase in premium because of that. That links to the 30% limit we have on annual premium increases, obviously linked to any broader increases the scheme might have as well too, which puts a limit on how much you can increase in 1 year. So you are protected being part of EBR as well. However, as I said before, while all those protections are there, the single best piece of advice I could give anyone is if you want to have lower premium, it's to run as safe a workplace as you humanly can.
And I know that's one of the things we try and do every year with some of our medium and larger size customers is having these early discussions about how your premium is looking for the following year. And some of you who may have joined us may have had some of those discussions already with your direct contact or relationship manager to try and help you work through some of where you're heading and help you prepare for what might be needed in terms of budgeting for your premium coming up. And again, we'll talk a little bit more about WorkCover Connect, but you can access a lot of this information at any point in time during the life cycle of the year to actually understand how you might be heading in terms of your premium. Just moving on to the weekly compensation cost bit, there was a question that came up earlier, and we'll have a look at it now, is claims excess. So it always comes up as a bit of a question for employers. What is it? How does it work? What am I required to do? Can you talk us through that a bit, Robbie?
Yeah, it's I would say excess is one of the questions we get most regularly. And I would say it's a regular question from people or from employers who haven't had a claim before. It's something that is communicated to policyholders when they take out a policy, but we can appreciate there's often a long time between taking out a policy and having a claim. As you have with your own personal insurance or your business insurance, which in most cases have an excess, there is an excess with the workers' compensation cover that we provide, and it's effectively a week's wages for the person that is injured. As you can see, there are some adjustments depending on the amount paid and vice versa, though those are quite minor. And that can be done, you know, in 2 ways. You would pay the injured worker an amount equal to the weekly compensation excess, and as they are off work injured. Should that not happen, we will pay the worker for that period of time, and then, which is unfortunately part of the area that I look after as well, we would have to interact with the policyholder to recover the excess that we have paid on their behalf. And I think this is probably one of the good takeaways for today, because people forget about it. But just like most other insurance, excess is something that is payable on what you do for work cover, and it is something that is important to consider right from the outset of a claim. For the next slide, I think you spoke about it before, Matt. Premium simulation is something we also offer, and that's done through WorkCover Connect. And I know that might be different to traditional insurers. You know, you don't normally have any of the, you know, the private insurers calling you up, telling you what your premium will be in advance and simulating it for you. You just get a bill. We are able to simulate premium for the coming year for any policyholder in any way based on some information they can provide to us. And I come from an accounting background. So in terms of when I'm doing my budgeting or planning for the year ahead, a tool like this would have been invaluable to me back in the day to work out what my clients would be paying. It'd also give you an idea of if you have had a few claims in a year, just how much your premium will go up, or better still, if you've had a really good year, how much your premium might go down and how much you don't have to apply there. Now, it's important to do that, to understand the wages that you would have for the year ahead, as well as the wages that you've paid. And we appreciate that's an estimate. And I think what this does, the simulator just gives you, you know, a really good ballpark figure based on all those things moving around what you might have to pay. And I guess what we're trying to do, and we don't want this ever for a customer, is any bill shock with workers' compensation. You know, the idea of having a transparent model for the way we do premium, as well as an ability to simulate it well in advance, means that when you get that bill when you renew in September or August or earlier, you know what's coming and there's no surprises.
So we talked about one of the most important things is having the right setup in terms of your policy, but also when it comes around to the renewal season, which we talked about, is what do you actually do in terms of how do you declare? What's the process through that, and what do you need to declare? So we thought this might be a good opportunity just to talk through the wages declaration, which is part of the premium renewal season, which we'll talk through dates and key times in a minute. But it's always a big question about what to include and what to not include in wages. So let's see if you can simplify this for the audience, Robbie, in this space, because it is quite a complex area, but well, the good thing to know.
No, thanks, Matt. Well, the good news with this is we have a really complex document. Complex is the wrong word. I meant detailed document that explains this complex series of situation. And it's called the Wages Definition Manual. There's a link involved with this. And in that manual, we have attempted to answer possibly every question anyone could have about any type of wages or payment that should go in. But I fully understand. Where we get into the detail on wages, it is really complex. If you're an accountant, you might know. If you're not, having to declare to WorkCover stuff like this can be quite challenging, especially when we say some allowances are in and some allowances are out, where we say don't include lump sum or excess. It is, however, something that we help facilitate. When you are declaring your wages for a year, small business under 1.5 million can do it in a very simple manner where they just give us one number plus apprentices, however, have an option to declare in detail. If you're over 1.5 million, there is a detailed wages declaration, Matt, that'll go through and remind you about everything that should be in there. It's also interactive. There's click downs and links in that to show you, okay, I have a question about allowances. What should I put in and what shouldn't I? At its simplest form, however, all wages that you pay a worker need to be included. Salary, other earnings, it also includes superannuation and anything of monetary value. And on the next slide, there is a little table that'll help out with that. We get a lot of questions on allowances, and maybe the next slide might apply it. Allowances where it's a reimbursement in regards to expenses incurred or work-related expenses, they don't have to be included for the purposes of WorkCover. I guess the notion there is that they're not sort of remuneration. There's something to say, well, as a worker, you've had to drive your car for work. You're going to get this, allowance to account for that, and it probably, something that would be deductible for tax purposes. Allowances that are paid under an award, industrial or agreement, or more general allowances that aren't linked to a specific work-related cost that the employee is incurring will be something that you do need to include. You include your PAYG. In Queensland, you also include your super, and it's really important to have that. Some of the ones that people tend to miss is FBT. The FBT definition for WorkCover is the same that you would have to declare for the State Revenue Office. It is something that is not normally a huge consequence to many employers, but to a few it's quite significant, and it is really important that that gets included. Otherwise, if you unfortunately get audited by one of my people, we may have to send you an additional bill. And it's important here to include, and I've mentioned this, I think 3 or 4 times, and I'm going to mention it 2 more. If you have a person that's deemed a worker, that's an individual contractor, one of those people on ABN, you need to include them when you declare your wages, the amount that you've paid them. And it would be a gross amount because you're probably not withholding tax, excluding any GST. But it's not all bad news. You do get to exclude lump sum termination payments. Any of that excess that we spoke about earlier that you paid gets to, be taken out. Any compensation payments where we've reimbursed you. As I spoke about earlier, directors, trustees and partners, they're not subject to being covered, therefore you don't have to declare them. And the one that I still get lots of questions on is apprentice wages. This is something that was brought in a few years ago to support small business and developing businesses and large businesses who employ, lots of apprentices. We want to be really clear on this. Apprentices are 100% classified as workers for workers' compensation, and they are 100% covered. You just don't have to declare them, and effectively they're covered for free under our legislation at the moment. That's been something we've had in for a while. The take-up is growing, I guess, as people become more aware of it, and we've made it a compulsory figure for anyone who declares so that they, have that thought. The question I get in that space a lot is apprentices and trainees are often talked about in the same context. For the purposes of this, it is only apprentices and registered apprentices who would be covered. A trainee is not covered by this discount. And we do have some confusion around that. Again, I would suggest if you have any questions about whether your person is an apprentice or a trainee, please have a chat to us and we'll run you through how we do the test. There'd be nothing worse than claiming a large discount and later off finding out that you're not entitled to it. We'd love to have a phone call from someone who's after some guidance on that to make sure that you get it right. We understand you're running a business, right? You don't want to get something wrong and then have an unexpected bill later on. We'd rather have a conversation up front with you now and really get it right and get it right forever.
And there's some other interesting sort of payments and various bits and pieces that you may need to consider. And we've listed a few things throughout. Do you want to talk us through the JobKeeper aspect? Although it's a little while ago, JobKeeper, but it was certainly a new area for workers' compensation and the wider community.
Yeah, it is. And I think there's, when something like that happens as a workers' compensation insurer, you really have to take time to understand the impact of that on your scheme and how people declare wages. And on our website, there is some very detailed guidance about every situation that you could imagine regarding JobKeeper. I will keep it simple today because there's a lot of people online. First and foremost, if you had a person who was stood down and paid JobKeeper, you do not have to declare anything regarding that person. They weren't working, the payments aren't in regards to work, the JobKeeper payment can be completely excluded. In the event the person is working and is in receipt of JobKeeper, it would be the best time, if you have that situation, to go to our website and have a look at all the different scenarios that can happen. We appreciate some people were working a little bit and then getting JobKeeper as a top up. Some people were working a lot and JobKeeper wasn't the same amount, was less than what they were getting paid. Depending on what situation you have, will depend whether you need to declare it. Does that make for a little bit of an adjustment that you have to do when you're declaring, and does it make declaration a little bit harder? It does. But I'm sure the overall benefits of JobKeeper to the business probably outweigh the little bit of adjustment that you have to make for WorkCover. We do get other questions on things like board and lodging, and I think that goes back to the non-monetary benefit items I mentioned earlier. Any benefits that are applied to an employee in their capacity as an employee for their service needs to be included, and board and lodging is something that doesn't come up that often, but is definitely something that should be declarable if it is something being offered. If you have that, you'll know you have it. If you don't, you'll be wondering why it's even on the screen. And then there are other exclusions, and the one we've put up there, an example, is federal government funded parental leave. There's no need to declare that. You will find, and we do share it later, all these obscure examples are in our wages definition manual. And if someone can find another example that they would like added, we would happily add it. We want it to be a complete dictionary of every possible question that we could have. There is one other thing that can happen, Matt. Someone can forget to declare and not. And we, it's not the end of the world. But in that situation, because workers' compensation is compulsory, you get a default assessment in the first instance, which means your policy is automatically renewed from the prior year. And we have quite a number of policyholders who get to that. And that can happen for a variety of reasons. We appreciate people are busy. We appreciate businesses have other priorities. One thing I will raise, and I do talk about it a little bit later as well too, is sometimes it's because people's contact details aren't up to date. And I do often talk to people who tell me, oh, WorkCover should have known I changed my business address, or I'm not the director anymore. And the reality is we're not going to know if you change your business address, if you stop operating your business, or you change your location, or you change your phone number. I do understand in the realms of people that you have to tell that you've changed, we might not be top of the table. But if it's renewal season coming around and you're thinking about WorkCover, or you have a claim or something, it's really important you make sure your details are up to date. And that specifically includes your email details as well. The way we predominantly discuss matters with customers these days is through email. And we know that they can have changes or issues at any point in time. So I would say it would be a good discipline once every year or once every couple years to also contact us and make sure your contact details are up to date, especially if someone has left your organization or not. Because if you don't declare and we do an estimate, the default is we take your provisional wages from the prior year and add 10% to that. And then for your provisional for the coming year, we add 10% to that. So if you somehow forget to declare but get the bill, it will seem higher than it otherwise would be. And that probably means you've got to get in touch with us to make it correct. In which case, if you're running a business, and we appreciate you trying to run your business, that's another thing that's taken out of your time and day, which if had have been done sooner, wouldn't have been as much of an issue.
In terms of actually paying the premium, once we've declared wages, so we've got lots of options listed up here. We're very flexible in terms of how employers can pay their premium to us. We're happy to work by EFT, BPay, credit card, online, or even over the phone. We also are happy to set up payment plans. Do you want to talk through our payment plan options, Robbie?
Yeah, man, most people probably don't realize this, but we have a completely interest-free payment plan that'll pay your premium off for the remainder of the year, depending when you take it out. There's no cost involved with it. There's no fees. And we split your payments into normally 10, 11, 9 months worth of payments. And I understand that business cash flow is often tight. A large bulk additional payment at the start of the financial year is probably not what people are looking for. So don't panic, talk to us and get the payment plan. It's actually an easy option when you renew. You just click a button and it can put you into the payment plan. In that case, you'll get your COC that we spoke about earlier, your certificate of currency, you'll get your renewal notice, and you'll get details about when the first lot of payments are going to come out, and you are done for the year. It's important to be eligible for a payment plan, but that you get it done by the 31st of August. So, we are certainly flexible with businesses. We appreciate over the last few years, it has been a difficult time for Queensland businesses with a variety of factors weighing into them, and we could list them out, but I'd probably unfortunately be here a while. We are happy to work with any business that comes to us and says, listen, can we work out a plan so I can get this payment paid off? No, notifying, or I guess being aware of the fact that, we do, need to have premium for 1 year paid off before the end of the next year in most cases as well too.
And we talk about the timeframes there. So obviously in terms of renewing your policy, we're about to hit that season right now. So hence the timing of this session. These timeframes up on the screen are essentially the same every year. We don't change them. So from 1 July, you're actually able to start declaring your wages, either using our WorkCover Connect online services or over the phone. You must have them done by the 31st of August so that you're entitled to payment plans and options around that. And then we've got a couple of options here in relation to payments. So if you pay in full upfront by the 16th of December, there are some discounts available on your premium. And also you must pay in full by the 30th unless you're in a payment plan. So we're quite flexible in allowing options for employers, and Robbie talked about understanding the different natures of cash flow in businesses and allowing that sort of flexibility to allow you to get on and doing what you do best as a business owner and having some flexibility in relation to paying your premium. And again, it's probably a good point to say we don't charge any interest on these payment plans. They're actually just divided up and spread across the year, which is something that not all insurers will do. So of course, we've talked about what it is and how it works and how you pay it. We always have to talk about some stuff that goes on around compliance in relation to premium. So we thought we would bring this up today just to talk through our approach to it and what it means and why we do it. It's an interesting topic. It's always something that comes up, and Robbie's area does this specifically in terms of working with customers who may or may not necessarily be doing the right thing in relation to their premium. So do you want to talk us through a little bit around the customer compliance program and how it works?
Yes, Matt, I'm very passionate about this and pleased that I get to, most of my presentations that I do are specifically in this space to help people understand what we do. And I think sometimes people see compliance in a bad light. The reality is the aim of the compliance program that we run here at WorkCover and that I want to deliver is to ensure fairness for Queensland workers. When we select our audits, when we select the people that we're targeting, we are trying to leave people doing the right thing alone. I only want to deal with people who are doing the wrong thing, and we target that specifically. And we are really concentrating on making sure that the person who's doing the right thing is getting the benefit of the role that we play to make sure anyone who's not doing the right thing is getting noticed and basically assessed as they should be. I think the one thing that I've learned over the years with it is that it's important for our policyholders to realise that we're a Queensland government statutory body, and it should be no surprise to anyone that we share data, information and ideas with many other Queensland government agencies and federal government agencies. We specifically share data with the ATO and the State Revenue Office, which is the old OSR, where they provide the details of your ATO lodgements and your payroll tax lodgements to us for us to basically directly compare to what you have for WorkCover. It's pretty straightforward auditing in that respect at that level because there's a direct comparison in most cases between those declarations. But we also go a step further. In Queensland, you have to be licensed for many things. So that could be to be part of labour hire, and we work a lot with labour hire licence in Queensland, and they are an organisation that has done a wonderful job since they've come in to help regulate that industry. But we also work with the food business licensing and liquor licensing. The idea being, if you have a liquor licence and a food business licence, but you don't have any employees, that might be a red flag for us to have a look at something that's going on there. And that's what we work. We work for any indicia of employment that might not otherwise be apparent. We also look at tender and grant applications, and that will surprise a few people. During COVID and especially working with QRider and some of the incentive programs during COVID to, incentivize more people being employed, we work directly with QRider to make sure anyone who is employing people through those programs also had a WorkCover policy, and or if they got a significant grant in that space, that WorkCover policy was appropriate. And that worked really well, not only in terms of compliance, but also education. And that's a large part of what it is about. We're not necessarily coming after people with a massive hammer, though I will explain what happens if things go wrong in a second. Especially for small and new businesses, we predominantly focus on an education program. So at the moment, our team today is up in Bundaberg doing site visits up there and not only looking in the retail space, which is, as new retail businesses come up, we often find there's some non-compliance in that sphere. They're out working with the agricultural and farming industry and the fruit pickers, as well as looking at the construction that's going on up there at the moment. And you can see pretty quickly, I've just given you 3 examples of quite a wide range of compliance risks that we look at any given point in time. While I've spoke about wages, I also should remind you, we also do reviews of you being on the right industry classification. It is not a good thing to call yourself a bookkeeper when you are a plumber, or to say you're a much riskier, less risky enterprise than, say, if you're cutting down trees or something where the enterprise is more risky. I think it's important for any policyholder to realise that we also have the claims data, and that's where we're a bit different to some of the other taxation authorities, where they're pure taxation. by being an insurance entity, we also have individual information about your business. So if we see a whole lot of claims for tree loppers, Matt, and we look at the policy and the policy is for an accounting firm, that's probably a big red flag for us. And in this modern day, all our alerts in that space are all automated and live in the system. So it happens very quickly when things like that happen as well. Now, if you are non-compliant, it's not generally the best outcome. We have powers under our Act, and I say we have powers because we don't necessarily always use them to their full extent, depending on the circumstances. But if you're underinsured, your premium's 5,000, it should have been 10,000. The penalty that's associated with that is 100% of your under declaration, which would be another 5,000. If you're uninsured, the liability is effectively, to a certain extent, only limited by the nature of the injury that the person has. In the event of an uninsured, and everyone asks me this, the injured worker is 100% covered. We will look after them. They get treated if the person was insured. And then we have the right under the Act to recover from the uninsured business the amount equal to the total claims costs, the weekly comp that Matt's talked about, the medical costs, as well as a 50% penalty. And I must admit, doing those are the hardest ones that I have to do because they can be really, really expensive. And no business starting out, or no business that's in a mature phase that somehow doesn't have a policy, could really handle such a significant impost on their business. There's an example on the right-hand side about a very serious injury where the total cost we raise is 600,000. And Matt, that's not the biggest one I've done. It's not even close. So for an uninsured business, I really don't want to be doing that with businesses. I want people to get insured and do the right thing, and we want to help people do the right thing. The best use of my people's time is not embarking on uninsured, claims cost recoveries. It is about working with businesses to get assured right at the start and when they are going. And in worst case scenario, you can also get prosecuted as well too. We do have a couple little tips here, and if you want to get it right, the people that get it right, this is what they do. They use the detailed declaration form to assist them. They use the question and they read the wages definition manual. And I appreciate not everyone will have an accountant, but I would suggest if you're in doubt and you have something tricky, it wouldn't be the worst decision to talk to your accountant or bookkeeper to help you through it. A large portion of people, it will be really straightforward. But if you're in doubt, I think having that extra expertise would probably be of a benefit. Don't declare late and try to avoid the late payment fees. Don't forget to declare. Red flag, red flag, red flag. And as I said before, part of that can sometimes be just because your contact details haven't been up to date. The other thing we also look at a little bit is making sure your estimate for the financial year forward is sound and reasonable. The way you declare what you paid in the prior year and what you think for the future year. We do live alerts to make sure that people are putting in reasonable estimates for the year ahead. And remember, again, we have the claims data. So if you've put a low ball estimate in and we see a whole lot of claims coming through, the system automatically alerts us to that straight away. And finally, really quickly, if you have any queries about whether your person could possibly be a worker, take on board all the things that we've given you or what we've mentioned here previously, but use the ATO decision tool. It is an interactive, relatively straightforward tool that asks simple questions. I get that there will be some people who don't fit in the standard things, but for most of your employees, or 99% of them, that will be the simplest and easy way to know that you're doing the right thing.
So what we've alluded to during the course of the session today, we've talked about lots of the knowledge and information, and we thought we'd just quickly take you through some of the things that are available for you as a customer to actually support you through premium and declaring your wages. The biggest one I can talk to employers about is our WorkCover Connect online system. So it allows all policyholders who have a policy with WorkCover, you can interact online. It allows you to look at your claims history, your premium history, industry trends in relation to your safety data, your claims data. You can actually interact with us in terms of communications back and forth with the claims owners at the time. So it has up-to-date claims information. It allows you to access those premium calculations, simulations we talked about. You can also grab your electronic remittances in terms of anything that's paid to you in terms of weekly compensation reimbursements. And you can also notify us of an incident and lodge a claim in one easy step through this. And it's free for every single policyholder who has a policy with us. So we highly encourage you to, if you haven't got that access already, you can contact us and we can set that up for you. Really easy to set up. We have an equivalent for workers. We have Worker Assist, so they can access this. And we also have the equivalent for providers, Provider Connect. So it's really powerful having that easy one step. And we appreciate that you won't necessarily be renewing your premium between business hours. You might be doing it after hours. So the beauty of the online system allows you to do that sort of stuff. So I'd encourage you, if you haven't got that, there are some videos on our website which shows you how to get the best out of the system. But again, if you haven't got access, please contact us and we'll be more than happy to set you up. Now, we talked through a lot of resources that are available on our website. The links are all here. We'll make them available as part of the slide pack. Our website has lots of information in relation to premium insurance coverage. There are some key links here for Business Queensland, the ATO determination tool, the wages definition manual. It is very detailed, but it tries to cover everything you could possibly ever need to know in relation to your premium. And as Robbie said, if there's something missing from it, and we think we should add it, we're more than happy to put it in there, because the more information we can make available to customers, the easier it might be to make sure you've got the right coverage to support you to be successful in business, but to avoid those risks that might happen that from time to time does come up. Now, we've also got a little bit of advice here on how to calculate excess. And each year we publish the Gazette, which steps through our methodology in relation to premium, as Robbie talked about. It's very transparent. If you're a numbers person, you can drill right into it and go into the detail, but it also lists all the industry ratings or Gazette ratings, which talks about the individual risks of industries and the ratings associated with that, which do go into calculating your premium. Now, so we've covered all the main content we wanted to go through, but we thought we'd allow some time for some questions from the audience. We did have quite a few questions come in leading in to the session. We actually had one today that came through on the basis of an earlier topic we were talking about, worker. So the question was, what happens if the individuals working for me are not workers under the Act, and then one of those individuals hurts themselves and lodges a claim with WorkCover? So I'll probably take that one. So essentially, when a person lodges a workers' compensation claim with us, part of the assessment of that is determining whether they meet certain criteria under the legislation. For example, are they under a self-insurer? Have they applied in a reasonable time frame? But one of the critical steps we always undertake is to run the equivalent of the worker determination tool across that claim. So we will make an assessment based on talking to the worker about what their circumstances are. And what we will do is talk to you as the employer to understand those arrangements so that we can accurately decide whether that person is a worker. If they are determined not to be a worker, the claim won't be accepted. Now, that allows the worker a right to review. If we decide that they are a worker, it also allows you as the employer a right of review, and will provide information that allows you to go through a formal administrative process to go through that. So we're very mindful of making sure we have the right information from both parties, the worker and the employer, so we can make the best possible decision up front. So when a claim does come in, we're really keen to talk to you as the business owner. Another reason to make sure we have your right contact details so that we can actually get to the right people to talk through it. But yes, so if later on down the track that the claim is accepted and they are determined not to be a worker due through some other information and it's turned over by the regulator, we will remove those costs associated from your premium down the track. So it's a little bit of protective mechanisms in there that we work through a bit. Again, if you come across this particular scenario and you're unsure, please talk to us. We'll definitely be talking to you around it, and we can talk you through the process that relates to that. Do you want to add anything else to that, Robbie?
I think that any employer who has gone through the worker determination test with their people and can keep that on file, and say it says they're not a worker, and they can keep that on file, keep that away. And if something comes up and it turns out differently, that's certainly quite a good argument for you to bring to us when we possibly look at you being uninsured. You know, there's the type of uninsured people who are doing it unintentionally, and then there's the type of people who have done the due diligence and determined they didn't need a policy. I can assure you the second type we treat in a different manner to the first type.
One of the other questions that I know this comes up in my experience of the last 15 years of being here is the critical question around journey claims. So are they included and do they impact your premium? So Queensland is one of the only jurisdictions that has the luxury of protecting workers while they're travelling to and from work, and also while they're on an ordinary recess break. So we appreciate that in those circumstances that you don't have a lot of control over what happens in relation to an accident on the way to and from work, or if they're out on their lunch break and might injure themselves. So we do cover that in terms of the claim, but what we don't do is include that in your premium calculations. So the obligations for you as an employer to try and support them back to work and work through to provide a safe place to work and successfully return to work early and communicate with us and work through that. But we take care of making sure that's not incorporated into your premium costs, calculation costs. So it is a regular question that comes up. It doesn't remove the need, as I say, to be actively involved in returning that person back to work. So just because it's not impacting your premium, I would suggest we're encouraging you to work closely with us to support them back to work as best as you can.
Now, Matt, there's some other questions I want to ask you as well too, because recently I've gone out and done a lot, as I've said a few times now, I've done out presentations to accountants and lawyers and other associations, and I've gone from getting questions about trusts and workers and a person working across two companies on a Tuesday and a Thursday to getting questions about COVID and working from home. So I'm putting this back on you because I've spoken a fair bit today. COVID is a significant impost on society, Queensland businesses, and a lot of very unwell individuals. How does that go for work cover? How does that go with accepting liability? How does that work in terms of whether or not a claim's accepted, whether or not the person got it at work, and vice versa?
Thanks for throwing I would say we've all lived through this over the last couple of years, and again, I'll point our listeners to our website. We have extensive information in relation to both COVID and work from home, and possibly every single scenario you could ever possibly think about in terms of whether it's covered or not covered. But essentially, when we make a decision around whether one of your employees who has has a diagnosis of COVID-19, may have also had an employer mandated vaccine where they've had a reaction to the vaccine, and or whether you've had a policy in relation to mandating a vaccine in your workplace, and or whether they've had some sort of psychological decompensation stress in relation to COVID in the workplace, or the potential risk of getting COVID, or even in relation to the mandated vaccine policies that you might have put in place. We apply the same lens in every single claim determination that we would do on a slip, trip and fall as we do to COVID related scenarios. We need to decide, first of all, for the normal tests, as we talked about, are they employed? Are they a worker, as we talked about? Have they applied in the right time frame? But then we need to make a decision around the injury itself. So what is the injury they've sustained? So have they sustained COVID-19 as an illness? And then we have to look at whether their employment, so was an employment a significant contributing factor to them sustaining COVID? So the examples I might talk through is if you're a frontline health worker working in a hospital and you're exposed to someone in the course of your employment, and it can be shown that you were exposed to someone who had COVID, which is most likely, and you then suffered COVID and was confirmed by a treating doctor or specialist, certifying that you sustained that in the connection of your employment, not the check-in app or not other tracing apps, actually something medically, which is the same with all claims. We'll make a determination on whether that's work-related or not, and we'll make a decision to accept one way or the other. So again, it's no different to how we would assess a back injury or a knee injury, but we just apply the same tests and looking at the information. Now, we'll talk to you as the employer about the circumstances to confirm whether they're exposed or not exposed. We'll gather the medical information from the GP specialist or hospital, as it may be in some cases, and then we make a decision in relation to that. If we make a decision to accept the COVID claim, then we cover them for all things that might be related: medical, rehab, treatment costs, weekly compensation costs. Pleasingly from our end, we have not seen a lot of these. Queensland were very lucky in terms of the exposure. We've seen more in the last probably 6 months than we did in the prior 2 years. But again, we make a decision based on individual case circumstances. There's no blanket decision whether they're in or out. We just have to assess it on the information in front of us. It gets a bit trickier when they're travelling to and from work on a journey. So the onus ultimately is on a worker to prove that they've been exposed to that and how they can prove that, because remember, in a journey or a research circumstance, we're not going to be talking about employment being significant. We're going to talk about actually whether they actually just sustained an injury. So as you can imagine, proving that someone has COVID-19 and was exposed to it on a particular bus or train can be quite challenging. But again, we work through the process of discussing with the worker, the medical providers, and you as the employer to confirm the circumstances, and then we make a decision. Vaccine claims are a little bit different. So if there's a mandated policy from the employer, encouraged or induced, and we can show that connection, and then they do have the injection, and they sustain an injury following that. So we're talking about significant or particular reactions that relate to those vaccines they've had. And again, we work through a thorough medical process, knowing what are the accepted definitions and accepted side effects. We make a decision based on that again. Again, same type of thing. We'll talk to you as the employer, we'll talk to the worker and their treating providers to work out what goes on there. And again, I alluded to earlier just about we might have scenarios where people have sustained a psychological injury in relation to either fear of COVID, stress in the workplace in relation to COVID or workload in that. We assess them in line with, as we do now, with normal injuries. We look at the circumstances, we look at the connection to employment, and we make a decision based on the information in front of us. So again, the critical piece of that is us talking to both the worker and you to confirm circumstances and understand the nature of what's going on, and then getting the medical information that supports that, either in the positive or in the negative. The other one Robbie alluded to was obviously working from home. So,
but what happens, Matt? Lots of the customers I talk to, working from home is a bit of a difficult one, right? Because they feel like there's a lack of control when an employee goes there, and that's a difference to when everyone's in the office. It's going to be different forever now, probably, but I think there might be, some good things you can explain about that to help people feel a bit more at ease.
Yeah, look, I suppose the way we take the view of it is, well, they're working. So it doesn't matter where they're working from. So in the past, before we had this new hybrid way of working, that people were traveling for work, people were working from different locations, different sites, interstate for short periods, even internationally for short periods, but still covered for workers' compensation on the normal sort of application of the legislation. So from a work from home type scenario, we take the same approach essentially. So we'll assess the nature of when they were working or not working, what's the injury, how was the injury sustained in the course of their employment. So just as if they were sitting in the workplace at their desk at work and they injured their back or for long periods of sitting, or injured their arm while actually doing long periods of typing or data entry, we'd assess it in the same place whether they're at work or whether at home. The biggest difference is you don't necessarily have the same control in relation to the work environment. We still apply the same test at looking at the circumstances, understanding were they in the middle of doing work tasks at the time? Were they actually in a defined work area that might be considered that? Because remember, they'll still be taking breaks and they'll still be, they won't be traveling to and from work, but they'll be going for their ordinary recess. They might be at lunchtime having their lunch and they might be hanging out washing. Again, we need to make determinations around the circumstances on that. So if they're injured in the course of their employment and employment is a significant contributing factor while working from home, they will be covered as per any other claim. And it will imply premium costs and associated. What I can only suggest with work from home is there is some great checklists on our website. We haven't necessarily included.
I think we will, and
yeah,
they link a lot to the workplace health and safety.
Yeah, they talk about checklists for making sure your employees are safe, how you can set up the workplace. It's similar to what you would do in a normal workplace, taking an ergonomic checklist, but actually a bit more practical in terms of working from home. Again, we have not seen a lot of this in this space, surprisingly. I think the positive nature of people working from home has been well received. Always the thing to watch for is, and just as with my safety hat in, is understanding how your workers are and how they're going at home, keeping regular connection with them, making sure they're okay, making sure they've done the due diligence around their workplace, their local workplace at home, and those sort of things. So I think there's some critical pieces of advice. And again, if a scenario comes up where you're unsure about, please talk to us and we're happy to work through that and understand the circumstances for your employee when they've been injured.
Very good. Good to have you answering some questions, Matt. So
better
turn it at the end.
So we thought we might just try and wrap up today before we finish up. I thought we'd just circle back to a couple of sort of real top tips and things to work through. So we've alluded to obviously making sure you declare early, so you don't want to miss out on any sort of benefits we could do in terms of payment plans. Pay on time. That's important. So that's certainly a critical piece.
Get into one of the payment plans early.
Absolutely, yeah. We really want you to have the right coverage to protect yourself as a business and your employees. Get it right. Take the time to review some of the information we have available to you. And if you're unsure, talk to us and we're happy to work through that with you and to make sure that you have the right coverage to make yourself successful as a business and provide the level of protection that you want. And then just a reminder again, the critical dates, as I say, from 1 July, you can start declaring your wages. They must be done by the 31st of August. If you pay in full by the 16th of December, there are discounts available. And then also paying in full by the 30th of September, unless you have a payment plan in place. Thank you very much, Robbie, for today's session. It was great to have your knowledge and insights and passion for premium and compliance. We hope that these sessions are useful to the attendees. This is our first real dip into doing a sort of a premium type style. We do think there's opportunities to do more in this space, and
I think we could go deeper on some of these topics if that's wanted. I think for anyone that's starting out, we've covered a fair bit today. I know it's a bit to take in, but it probably gets you most of the most important things up, we hope.
Yeah. Again, thank you for everyone who's joined in today. We hope you found the session informative and useful. We are recording this session and it'll be sent out to you early next week, and it'll be also uploaded to our YouTube channel. Remember, we're always here to help. Give us a call, get in touch with us or your relationship manager, or shoot us a message through WorkCover Connect and a team member will get back to you. Thank you. That's all from us today here at WorkCover. Stay safe and hope you have a great rest of your day.